All right, well, thank you everybody for coming out for the YASI BI event. My name is Joel Levington. I'm the Global Director of Fixed Income Research here at Bloomberg. I just wanted to take a minute to first thank Ralph and the YASI team. This is the third time in 4 years that we've been lucky enough to sponsor you guys and have you in. It's a lot different than it was 4 years ago. Our team had just started out at that point. There was a handful of analysts and some ideas. Today we're a team of 27. We're global. We have over 300 issuers that are covered in terms of credit research. And we get about 70,000 reads a week. So certainly we've become more valuable to our clients. And that's what tonight is all about, is how we can become more valuable to you, how we can make your workflow and your insights hopefully stronger and more insightful and quicker. And so tonight, we thought it would be a good idea to start out by talking about the indices that we have. Obviously, we were fortunate enough to be able to buy now the Bloomberg Barclays indices a couple of years ago. And so Sarah is going to take us through the indices and where you can find them and all the great data that we have on the terminal with the indices. Josh is going to come up after that. He's going to take us through a function that our team uses religiously, which will help you in your analysis of valuation of bonds. And then we're going to have three of our superior analysts, my man Arnold Kakuda, taking over global banks, Greg Klein, who's going to be talking to the gaming and leisure sector, and then Jamie Patel, who's going to be covering utilities. And each one is going to give you specific examples of how the functionality can be used in your daily work process to make your life quicker. So with that, thank you so much, and let me turn it over to Sarah so she can get right into the different indices that we have.
All right. You guys hear me okay? Great. Good evening, everyone, and welcome to our Credit Research Insights event hosted by the Bloomberg Intelligence team. My name is Sarah Klein, and I work in the index product team here at Bloomberg, and I'm also a board member at FIASI. The BI team is very excited to talk to you about some of the credit tools we have available on the terminal. But before getting into that, I just want to give you a little bit of an introduction to the indices. So as many of you know, Bloomberg acquired the Barclays fixed income indices and became the biggest fixed income index provider globally. We are now in the middle of a multi-year project to migrate the acquired indices from Barclays over to Bloomberg. So we think of this deal as a trilogy. The first part, the negotiation and signing of the deal, occurred in December 2015. The second part of the deal completed in August 2016 when the deal closed. And at that time, Bloomberg received the indices and Barclays received their $800 million. And now we're in the final part of the trilogy, the migration. In this phase, all aspects of the index business and process are being moved over to Bloomberg. We expect this phase to complete in August. So you might ask, why did Mike Bloomberg decide to pay $800 million to acquire these indices? The answer is that the indices are a natural fit for us here at Bloomberg. The terminal business is very important to the company, and we have to continually invest in it. Putting important index content on the terminal is one of the ways that we make the terminals valuable to our users. And the indices are a natural fit because of other businesses here at Bloomberg. We consider 5 pillars as requirements for a proper index business. So 1, data. We know Bloomberg has world-class data. 2, pricing. We have the BVAL business here, which powers the indices and is used very widely. 3, analytics. We have single security calculators on the terminal that are industry standard, as well as Port, which is the most widely used portfolio analytics platform. 4 is distribution. So the terminals provide access to users across the globe. And 5 is research. The BI team provides commentary on the indices and is well known to market enthusiasts. So you can see that having clients using Bloomberg indices with Bloomberg data while reading Bloomberg research is very compelling for us. Another reason for the acquisition is the shift in the index business. Historically, fixed income indices were developed at banks, but the banks are now divesting these businesses, and data providers such as Bloomberg are the acquirers. Banks profited through trading, but as a data provider, we don't trade, so instead we win when people are using our terminals to access the indices. For this reason, we're democratizing access to the indices. The indices are made available to all terminal users at no incremental cost. There are subscription fees to take data off the terminal, but everything you see on the terminal is available to all of our users. To To complete the migration of the indices over to Bloomberg, we're building a brand new platform. This will use state-of-the-art technology and is built to be scalable and flexible. We're calling this new system the Index Factory. Index functionality that's available on the terminal now is really just the beginning. Another project that we have in the works is called IQ for Index Query, and it'll allow you to build your own custom indices on the terminal. You may have also seen that we just announced we will be adding China to our flagship global aggregate index. As we complete the migration, we'll be continuing to invest in the index platform. This will allow us to grow our fixed income offerings and also explore equity indices and multi-asset class benchmarks. So it's a very exciting time to be working in the index space. Now I'm going to go through a few of the index functions before handing it off to Tashash. So here we have a function IN. You can just access this by typing IN go. This is available to everyone again. So on this page, you can see all of our index offerings. Across the top, we have these tabs showing different asset classes. And within Bloomberg Barclays, we have index families going across the top. First, we have key indices here. And so here we've picked out some indices that are very widely used, kind of as a shortcut. But let's go into the US tab. So this starts from the US aggregate and then breaks down that index into sub-indices based on different ways of slicing and dicing. So we have a maturity breakout, quality, classifications, etc. And you'll see as you go into these, so I'm going to open up corporate here, that you get kind of layers within. So these are different ways of analyzing a benchmark and kind of looking at how different parts of that benchmark differ. So here we're looking at the returns view, and so this is giving us a few return measures for all of the indices. So you can see I'm looking at US corporate. Within that, the next level down in the classification hierarchy is what we call B Class 2. And so that breaks corporates into industrials, utilities, and financial institutions. So this gives you a quick look month to date at how these three sectors are doing as components of the corporate index. The next piece we have is the projected tab. So here you can see what we think of as risk measures, which are computed against the projected universe of the index. So this allows you to look at measures like option-adjusted duration, option-adjusted spread, and yield. So this function now contains many of our indices, but it's something that we're building and continuing to add more indices and more analytics and fields to. So I'm going to go ahead and load the corporate index, and you'll see it's up here in the command line, and I'm going to run does. So the description function really just gives an overview of the security you have loaded. So you can see it's bringing in different components of other functions where you get more information. So this has the description of the index. Here we have kind of a snippet of charting. So you can run this function GP to get access to more charting tools. We have a little snippet of the returns of the index. And so again, TRA is where you would go to get more of that. And then over on the right, you have a little bit of information on the index and some characteristics and analytical fields. The next item down is called top weighted members. And this is bringing in a few of the securities, the biggest securities in the index. So this view only has a handful, but if you want to see all of them, you can just click here. And this is actually going to load up all the members of the index on the date that I have loaded here. So, one thing to know about the structure of the indices is that every index has kind of two sides to it at any given time, the returns universe and the projected universe. The returns universe is used really for benchmarking. The membership is fixed at each month end and held constant over that month, whereas the projected universe is used kind of as a constantly updating view to give you a sense of what the index is going to look like at the next upcoming rebalancing. So you can view the bonds in the returns universe and the projected universe. And another thing you can do here is you can use this group by box to see the bonds classified or grouped in different ways. So here I'm loading B Class 3. That just means the third level of our sector classification scheme. And you can see all of the bonds here get sorted into these different sectors. So if I want to see What are the bonds, capital goods? I can open that up and look into it. Now, if you're familiar with the whole rebalancing mechanism where the returns universe is held constant for a month and the projected universe is updated every day to give you a view of the next rebalancing, you might want to know how are those two things different. And so we have the index turnover view, and this tells you which are the bonds that are coming into the index and which are the bonds that are exiting the index. So you can see up at the top, we have a very quick summary of the bonds entering and exiting. And if you want more detail, you can actually look at the individual bonds. So you might have some new issues entering and bonds nearing maturity or bonds that are called dropping out. So that's a very quick intro to some functionality we have on the terminal. Anyone have any questions for me before I turn it over to Josh? All right.
Good morning, everyone. My name is Tejas Shah. I'm one of the fixed income market specialists. And what I wanted to talk to you about is this concept of relative value. And what I'm going to do is showcase, highlight how you will be able to leverage this if you are trying to get this to the bottom of relative value in your store.
You need to use the mic, sorry.
Okay. Does this work? Yes? Yeah, okay.
Thank you.
All right. So what I'm going to demonstrate to you is how you're going to be able to leverage Bloomberg if you're trying to understand relative value within the US core principles. Some of the things that I'm going to bring together is this concept of fixed income worksheet is one of the relative value tools we've built on Bloomberg recently that Joel alluded to earlier. But it's not a standalone idea. It seeps the entire fixed income ecosystem in Bloomberg. So while Sarah and her team are busy onboarding all these indices, importing them into Bloomberg, right? They don't just sit in a vacuum somewhere. We keep building these relative value tools, and everything that Sarah's team brings in neatly flows into this idea. So Bloomberg Barclays classification system is a good example. We didn't have that before. We have it now. The index main page that Sarah showed you, that's not the only place you're going to find this. These classifications are going to flow through the system now. So you're going to be able to nail down and go down to sector industry level based on those classifications and do analysis. That's kind of it. But before we go to these kind of tools, let's just take a quick look at what is going on. So if you're looking at indices, and we go to the index page that Sarah showed you earlier, right? A very quick look, and this is as a Friday, numbers have changed a little bit, but nonetheless, US corporates lost 3% this year. China Ag up 4.7% this year. Actually, I just checked half hour ago, it's up 5.4%. We all know why that is, because Bloomberg Barclays Index is announced last week, 2 days ago, that that's going to become part of the global ag. So we know who is buying it. US corporate index, which is mostly IG, actually all IG. We know why that's losing value because rates have gone up. But somewhere in here, you get a sense of what is going on. Global treasuries is an interesting insight into up to almost 3%, right? Whereas US Treasury, which is a big part of that global treasury, has lost 1.6%. Here's a quick way to understanding the screen and trying to figure out, okay, what is going on in the world, and maybe I got to go look at global treasuries ex-US to figure out what's driving this performance. So that's the idea. I'm going to use the US corporate index as an example to show you what relative value analysis you can do, give you a little snippet of it, some taste of it, right? Before we go there, let's look at what has been happening with that index, right? So US corporates, if we talk about them, for 2 years running, literally February 28, 2016 to about 3 weeks ago, right? They rallied 130 basis points. Last time they were at 215 bips was February 2016. Oil was at $26. S&P was somewhere middling around, and oil, for whatever reason, started going up. Then we all know what happened. Brexit happened, election happened, and here we are. But until about 3 weeks ago, US corporates, the party was on. And now if you go to this chart and start looking at March, they've not only lost everything they made this year, but they've lost more than that. That's the idea. If you start analyzing these things on Bloomberg now, and you take that index and split it by Barclays level 2, level 3 sectors, you find out that, okay, obviously there are some sectors that are making money, some not, mostly losing money. But before that, let's look at what's happened. Year to date, lost 7 basis points. Month to date, lost 10 basis points. So again, reinforcing the concept that basically all the losses are coming from this month. right? But inside here, there are a couple of sectors that are making money. There's this other financial sector, which has only 3 bonds in it, so we can ignore it. But there's this other industrial with 36 bonds. Not a lot, but it's there. Valued about 5 bits, almost 5 bits. Very interesting. We'll go and see what that is in a second. Other ways you can look at this, you can split them by Barclays level 3 sectors, right? And I know this chart is a little small, but the axis here is showing you change in option adjusted spread year to date, right? And each one of this is a level 3 sector. If you take a closer look at it, right here, technology in gray, you immediately start finding who the outliers are, right? Here you got Pitney Bowes outperforming pretty much everything that's out there, right? In transportation, TRI, which is a railway company, outperforming the rest of its sector. Very quickly you start getting an idea of what's going on out there. Just eyeballing this, technology seems to have much more winners than losers, because that dotted line is zero OIS change. Energy seems to split half it, kind of idea. So these are your quick takeaways once you start analyzing these indices on Bloomberg, beyond taking in the main page and taking to these kind of tools on Bloomberg. Energy, we talk about energy versus technology. Let's look at what is happening across the curve rather than just one number. So here I'm looking at energy versus technology inside US corporate bond index, right? Short end, pretty tight on top of each other. Green's energy, red's technology. But as you go up the curve, you start realizing that energy is trading almost 75 basis points wider to technology, right? Going to our other example where we had winners and losers laid out by Barclays level 3 and change in OAS. I can add more dimensions to that chart. I can say, hey, is there any other factor that's driving the winners and losers? Is there something else that's splitting these two apart? So what I did was, I added amount outstanding as a size for the public. And it gave me a scroll bar here. So I started filtering down. I just started going, show me bigger bonds. And right about where I reached a certain level of issuance, I found that beyond that, I think that's about 8 billion. 8 billion and above. Your GEs, your Alibabas, your Bank of America capital bonds, all these. So your biggest issuers in the US corporate index, they're all losing money. So if you're trying to look for winners, you're going to have to go down in size. That's the idea. So these are your quick ideas that you can take away from it. So let's look at this tool that I keep talking about, in case you haven't seen this yet. This is fixed income worksheet. We're not going to go through every bells and whistles, but I'm going to show you a few other interactive things you can do. On the top left of the screen, what you're looking at is my list of bonds that I'm analyzing. In this case, it's a US corporate bond. It can be anything. It can be a portfolio. It can be a list of bonds you're keeping in your Bloomberg monitors. You can drag and drop bonds from Excel if you want. It can come from anywhere. That's the idea. And you're going to see some of these links as some of the other analysts come up and show you how they analyze things. You'll start realizing that the whole ecosystem is extremely well integrated. Right? So I might go US corporate bond index, right? And on that, I'm looking at these facets. So we build these facets on the left, just like you're shopping on Amazon, right? You go to Amazon and you go on the left and click, filter everything down to what I want. That's the same idea, right? Click, filter everything down. So I'm going to go straight to that other industrial sector to see what's in here. It's only 36 bonds, but right now 5 basis points of outperformance, I'll take it. And let's go look at what's in it. And once I go here and I look at it, right? And I say, oh, this is interesting. Now it's all just other industrial, so I don't need to look at things by sector classifications or something. Let's look at it by issuers. So I'm going to color code this differently. Color codes by issuers. And you take a quick look and what you find is these are all these, there are other industrial, but these are all names that you never think about. Stanford, MIT, Princeton, all these bonds are out here, UPenn, Caltech. These are all outperforming the rest of the index. It's pretty wild, right? And then you start doing analysis and you find that some of these MIT bonds here, these are 100-year bonds with a coupon of 4.5, 5.5, 3.8. Pretty chunky coupons in these days, right? They are outperforming, which is interesting. These two MIT bonds, they both are almost 100 years, slightly different in duration, right? This pays 3.8, this pays 4.6. This is losing money, this is making money. There's my swap opportunity right there, right? This is the idea here. Spotting trade ideas, spotting trade opportunities very, very quick, right? Let's switch gears a little bit and let's look at some other things. Let's look at energy that we were trying to analyze earlier, right? So I'm going to go here to my facets on the left again and say, show me energy. Don't look at other industrial, just show me energy. And for grouping, I'm going to say up here, while it's loading, okay, let's go to level 4. So let's go one level further down. Now within energy sector, I have all my industries. And again, I'm looking at change in OAS year to date. I can change that axis in many different ways. I'll show you one example of that. But all these bonds are sized by amount outstanding. I have a filter for that here. I can zoom in and out. And the color coded by industries. So very quickly I get a sense of what is going on here. Here's your analytical petroleum. 7.95 2039s. I rallied almost 38 bits year to date. Okay. Here's who's COP? I forgot. Sorry. ConocoPhillips. Thank you. I have a blank moment. Again, ConocoPhillips are performing 35 basis points rally year to date. That's the idea. You can spot these things very, very quickly in relation to rest of your cohort bonds. What I can do here now is I can say, okay, only show me ConocoPhillips is an independent. So let's uncheck everything else. And let's just look at independence. ConocoPhillips seems to be outdoing everything else. Or this analytical petroleum, either one of them, seems to be outdoing everything else, right? So what we're going to do is select everything else that's out there. Because what I'm going to try and do is like, yeah, it's outdoing it right now. But how is it done in the past? So I'm going to select all of that. I'm going to right click in this analytical petroleum bond and say plot the performance. And when you do that, you're going to get this chart. Okay, what you're looking at right now in OAS terms over the last 6 months or however time period you want to go to is the blue line is the OAS of that APC 2039 bond. This white line that I just calculated in the back, what Bloomberg did was took all those selected bonds, created a simple average of it, and charted it for equal weights. One thing in fixed income worksheet, or actually any relative value tool they look at on Bloomberg, fixed income worksheet, a bunch of them, it's in the cheat sheet in that. We're looking at equal weights. Outside of the portfolio system, we do everything equal weights. And it's a philosophical choice really. Portfolio system goes by weights, not by amount outstanding. Because the idea is, for relative value, it skews the analysis. That's kind of our philosophical system. So this is all equal weights. And as you can see, until about end of last year, they had a pretty tight spread of, I don't know, about 130 basis points. This is the spread between the two. Obviously, something happened late last year into this year until now that APC started outperforming the rest of the investment. That's the idea. By how much? By almost 40 basis points. There's zero analysis. So this is how you can slice and dice these things much, much quicker, very quickly, very easy, right? I can also do these things like I can say, okay, this is great. Let's go back to looking at everything. Unselect what I have looked at, okay, and say show me by issuer. Because I want to look at what else is going on with APC, right? So now I have looking at everything by issuer. I can click on analytical petroleum. And I don't know if you can make this out from the back, but all the APC bonds on this duration line have been highlighted in black circles. So 1, 2, 3, 4, 5, 6, 7, 8. Very quickly, the short end of APC is underperforming the long end of the group. I'm getting a quick sense of what is going on. So these are ways you can leverage this tool to figure out what really is going on. Right? Look, I can go on for another 15, 20 minutes, half hour, 1 hour, however long. But as you can sense that this is a very powerful tool, very nicely integrated with the rest of the Bloomberg ecosystem I was mentioning. You can, all of your Bloomberg users, you probably know the amber color box means you can click and pick something else or put in your own amount. So once you start playing with these axes and colors and amount outstandings, you'll probably find a lot of interesting things in here. Right? Why did we build this tool? Is to answer questions like this, right? I want to see us, even before I start visualizing this thing for you, spread curves and performances, the first tab, which we didn't look at, but there's a first tab matrix tab that gives you a simple sector industry to rating spread matrix. It's very hard to find that anywhere else, but I'll give it to you right away. And then you can start filtering as well. I'll give you curves. We built this to answer questions like what is the richest, cheapest bond in this index or in my portfolio? How is it being now versus in the past, in historical performance? Or how is it doing now versus the rest of its cohorts, which I get to pick, by the way, as a user. I'll pick your comps. I'll pick my own comps, and now you show me performance versus those comps, right? One of the things that we don't go into is are they even liquid? So if I was interested in this APC bond, right, it's rich in double R, maybe I have in my portfolio, maybe I want to sell it, right? Before I send this to my PM, and then he calls me out for doing bad analysis that we haven't got a single run on this in 2 weeks, nice analysis, thanks, go back to work, right? I can go quickly check, is there an ax on this amount to my firm? And guess what? Yes, there is, and you'll tell you the size of it. This is all coming from your message scraping data that you're doing for, right? So again, efficiencies is what we're talking about. And one last analysis you can do with this, which an example we won't go into, but how, if there's a new issue coming up, CDS is coming out with this massive deal, how are these 8 different bonds of CDS that they're going to launch compared to the rest of the bonds? I can very quickly give you counts of CDS inside this tool in about 30 seconds flat, draw you the curve, and then you can plot all the CDS bonds on it, and you can figure out, hey, at announcement, at guidance, does this make sense? Or do we want to go long, or we'd rather just go to secondary market and buy something else to satisfy exposure? That's kind of, these are kind of analysis that you can do. I talked a lot about integration to the rest of the system. One thing that you will see in examples in speakers after me, one thing I will say is, the beautiful idea about this is it's extremely user-friendly in the sense that I can share this very easily. If I'm so firm set on this idea, I can save this. I can say, add text here. Oops, sorry. Just sell it. Thank me later. Okay. It's in white, but anyway, you get the idea, right? And save it. And I'm not going to send my portfolio manager a Bloomberg message because it gets buried in his or her thousands of runs that they get every day. I want to send it via IP. And watch what happens when I do that. I'm going to send it to myself. When I do that, this is what my portfolio manager gets. It's a link. And when my portfolio manager clicks on that link, this is what happens. It will wake up with the exact same filtering, color coding, etc. This is an Excel sheet. It's a souped up Excel sheet inside the Bloomberg ecosystem that we built. Hopefully you find value in this. Thank you very much.
All right, thanks to Josh. I also echo the integration of the Barclays indices into fixed income worksheet, FIW, probably one of the best things that's happened to me in 2018. So, although I hear the ribs tonight were pretty good and the drinks, but yeah, really, you got to check it out. Really easy. So all the bonds are in FIW already that you want. And for me, I'm a banking guy. I'm going to click on banking. I click on, what are the top tickers? Goldman, JP Morgan, Citigroup, boom, 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 and then I hit chart, and I have my correct curves. So definitely got to check it out. Kudos to them. All right, so let's talk about banks. I cover banks here at Bloomberg Intelligence. I'll be leading off the BI credit section, followed by Greg Klein, who's going to talk about gaming, and then Jim Patel, he's going to wow us with his utilities and refineries knowledge. All right, so let's talk Barclays. So here we have a screening tool, Banks Go, where we can look at both the CDS and equities of Barclays. And what you'll notice is actually in 2017, Barclays stock worst performing of peers. Now here it appears that the stock has recovered in 2018, and although the CDS has widened. And there are idiosyncratic reasons for that. So first off, on the stock, the bank announced that it would increase its shareholder returns in 2018. Higher dividends, a possible share buyback, right? Bondholders, not so lucky. We've been hit, well, Barclays has been hit by Moody's with a negative watch, rating on review for downgrade due to the ring fencing of its more profitable UK-based businesses. Okay, so now you're thinking, all right, I gotta find out more about Barclays. Great. Because we have primers at Bloomberg. It's all in the terminal. Bloomberg Intelligence primers. So hit BIP Go, and there you'll see over 2,000 primers. So research written by analysts at Bloomberg Intelligence on 2,000 companies. What you guys are interested in, or should be interested in, are the 300 plus credit primers written by our team, right? So let's go to the Barclays credit primer. Let's pretend I'm clicking all this stuff here. So you hit BIP Go, and then credit, and then hit investment banking, and then you'll see my coverage universe here. And then hit Barclays, and then boom, transport you to, I feel like I'm on a cooking show, transport you to the credit primer of Barclays. And the second page, we call it bit 2. That's something that I think you guys should focus on. It's the summary checklist. And that's where you'll get our color-coded thoughts on the various metrics that we think are important for that company. So the takeaway here is a lot of reds, so probably not many good things going on, but there is one green, capital. So let's first start there, capital. So here we have our interactive common equity tier 1 model. And this basically tracks the capital level of Barclays versus its peers, as well as versus its requirement and its targets. So the key takeaway here is that capital is good. Barclays is 13% common equity tier 1 ratio. That's about 200 basis points above its requirement, and it's within the range of its target levels. So capital good. Let's get to the more exciting stuff. All right. So here we see that the concern is Moody's has slapped Barclays with a put it on review for downgrade, right? Due to the ring fencing, I put up a red box, but the ring fencing of its more profitable UK-based retail and commercial banking businesses. Now that's an issue because the UK businesses, right, the retail and commercial banking business, that provides more stable earnings versus its sales and trading segment, and that's housed over here in the international segment. So, and that can have volatile revenue streams, as you guys probably all know. So, what's the security look at here? I think is it's a subordinate debt. The sub bonds of Barclays rated Baa3 by Moody's. Now that is the median Moody's S&P Fitch rate, median Moody's S&P Fitch rating for the bond. So basically, if this gets downgraded, these bonds move from the IG index into high yield. So how have the bonds done? Well, predictably, everybody said, "Oh my goodness, these guys are going high yield." So underperformed versus Barclays sub debt. Right? And so, towards the end of February when this happened to now, it's underperformed. And the point is that people, I think, are anticipating that Barclays is going high yield, right? Did they overreact? Like Deutsche bonds are already in the high yield index. So this is, the point was to show, hey, maybe the worst may be over. And that was last week, so this is a snapshot. And boom, today, we've had some news about Deutsche Bank, where there might be some executive suite changes, and so now the the spreads on the bonds trade flat. So it would have been nice advice a couple weeks ago, I guess. And with that, I will turn it over to my man Greg.
Arnold. My name is Greg Klein. I cover gaming, lodging, and leisure here at the Bloomberg Intelligence. I joined about 6 months ago. Before that, I did about nearly 20 years on the sell side. So I thought tonight I would go over with you Caesars, as well as show how some of the things in the terminal you might find useful. Well, taking a look at a company like Caesars, the first thing, and I assume many of you are familiar with the story here, in that it was a long, protracted restructuring. It took about 2 years to be completed. It was completed October 6th of 2017, so it's a recent restructuring. Now that that's done, the company's back to their CZR. The question is where is it headed? So for that, we're going to take a look at how its casinos are operating. I went to the gaming dashboard for that. where they track all the performance of different gaming markets. You can see on here, like Las Vegas Strip, which is 60% of Caesars business, a little choppy. We'll get actually the next chart will show better of that. It also gives you all different markets from Atlantic City, Chicagoland. Caesars has a big presence in both of those markets. This is just annual, but you can break it out monthly. A lot of people track this data, but it's all right here in the terminal. So in the Caesars case, what you've been seeing are the regional casinos have been growing in called the low single digits on the revenue side, and Las Vegas has been a little more volatile. This is, I always love this chart. It shows what happened to the Las Vegas Strip. You can see with the recession in 2009, how gaming revenues just came crashing down. It then starts to recover, dips again in 14 due to a variety of reasons, a little economic softness, the convention calendar was unfavorable, weather, so you had a few things going against it, and then it came back again, almost surpassing where it was in 14. 2017 will come in slightly down. That's because it was up year to date in September. You had a tragedy that took place on October 1st, and that hurt their fourth quarter. But for a company like Caesars, where 60% of their business is in this market, you can be fairly confident in at least having a window into how the company's earnings are doing going into as you model it out. Now, when you look at Caesars, again, this is off of another dashboard, another FA dashboard on the terminal. You can see this is their quarterly EBITDA. Now it looks like, wow, what happened in the fourth quarter? That's a little deceiving. That's because the SEOC restructuring was completed, so now SEOC is back into the company again as a restructured entity, which causes the huge jump up. But even before that, EBITDA was growing nicely on a sequential basis, growing at around 4 to 5% per quarter on a same store basis. Now, as far as the securities within Caesars, Arnold showed you one way by going through VIP that you could get to primers, the research notes that we put out. Another way to do it is if you just go to the equity description page, you can see under the name, and instead of light blue where you have Caesars Entertainment Corp, just below that is says that there's a BI Research primer. If you click on that, it'll take you to primers. Go to the fixed income one; it's usually better, and the credit one, and that will bring you into our most current research note in the company. This one for Caesars, if you flash forward to bit 10, you would see the whole cap table for the company. Total leverage 3.7 times. If you want to look at apples to their peers, once you take their lease adjusted debt, brings you to 6.4 times. But you see there's a huge cash balance. They're making a large acquisition, and it's closed in the second quarter. They're going to fund it out of cash. So this company, on a same-store basis, we're projecting EBITDA growth around 5-6%. Pro forma for the acquisition, it should be in excess of 10%. Now, if you that chart here, which is applied in the primer, if you were to click on it, it brings you to an Excel file. Now, when I was on my years on the sell side, I'd often get phone calls from accountants and people saying, "Hey, can we have a copy of your model?" And I have to go through compliance and go through sales and they get this whole approval process, and it never ended. It took forever. So one of the things that we're able to do here is this is a version in Excel of a model that we put out. So you can have it's right there for you. I don't know if everyone's aware of that, including in the orange where you can customize it. That in the right side, in the right corner there, you can put in your own estimates. If you think Las Vegas is going to do better than we project for the first quarter, feel free to change it around, and it flows through the model. Overall for the company, we're expecting around 10% growth in pro forma EBITDA. I think it's an interesting credit. With that, I'll ask Jamie to take over.
Thank you. Thank you. Good evening. Hopefully you can hear me. Last speaker tonight. I wanted to do something a little bit more generic rather than talk about a specific company, although I did have the chart up for Valero in case we wanted to talk about that a little bit. What I want to talk about is some of the information. Where does this information come from? Where do they get the groundwork? Where do the BI analysts get the groundwork to and the data in order to create some of this wonderful analysis that you see? What I'm going to show you is start off with the dashboard. So usually the easiest way is to go to BI for Bloomberg Intelligence, and you'll see a list of all the sectors on your left. Pick the one that you want to get some coverage on. In this case, I'm going to pick utilities because that's the sector that I cover. Going down further into electric utilities, the quicker way, there are always quicker ways to get into this. In this case, it's BI-EGen if next time you don't want to go through the BI. All right, so this is your dashboard. Right at the top is going to be an industry outlook. Everything on the left here is clickable. I'll talk about credit in a second, but we also have government, litigation research. This would also be talking about environmental as well as regulatory. Everything that's occurring in that particular industry and that's been written about, you will find on the dashboard, either here in credit, government, litigation, etc. There's your credit. Most of the stuff here would have been written by me. It's broken down between thematic stuff as well as something that's company specific, sorted out by date. Obviously, if there is a particular name that you want to go to and don't want to have to search the whole thing, simply go to that company's CN page, and usually the third or fourth line down will give you what the latest primer is. Let's go down to this data library over here. Show you some of the neat things we can do, and just with a few clicks, how you can come up with some very simple but very useful analysis. So I've switched over to the annuals. You can obviously use the quarters. As I go down here, any one of these you can click on, pull it up for that particular for a particular company, all the way from revenue down to adjusted EBITDA, etc. What most people tend to find most useful is this ratio page over here. So rating agencies tend to use net debt to EBITDA, FFO to debt. In this case, let's just take a quick look here at net debt to adjusted EBITDA. If you click on the plus, all the company names will come up. Click on the graph, and that will give you what it's done over the past so many years. You can obviously change that if you want to go to 10 periods or 5 periods or 6 periods. Now let's say there's a particular company that you want to compare net debt to adjusted EBITDA. Just simply go there, click on the plus, pick your company. In this case, let's say we want to pick American Electric Power. And there you are. Because you have multiple axes, simply just change and make it a single axis to see how it goes. So you see AEP generally was very close to the median and has much lower leverage at this point. If I go further down, one that we know where the leverage has gone up very significantly, you look at Duke and you can see how much higher that leverage is, right? You can use this as data, you can use it as a graph, pick what you want. But one of the nice things is it gives you an ability to sort of analyze between specific companies and compare it to the average. You can also, in this case, let me just go to the annual here. One of the things you can do is if you go to, again, let's go back to net debt to adjusted EBITDA, and you want to see where a company fits overall within that particular sector. These are the leverage numbers here where I'm clicking down. So if you're looking again, for instance, at Duke, you'll see that net debt to EBITDA was 5.16, which is sort of at the high end. If you're looking for companies specifically that have low leverage, this is a really good way to do it. These numbers are updated on a quarterly basis. If you want something that's, I'm not sure why, but if you want something that was particularly levered, and then compare it to a specific spread, this is probably a really good way to go to it. Just one more thing here, I'm going to just quickly point out on plant operation for those of you who really do look at utilities on a regular basis. This is something that we've added. We have all of the capacity broken down by fuel, by individual utilities. What we're trying to do is to get together generation numbers and put those in so that you can analyze not just the capacity for various utilities and power producers, but also look a little bit on that at the actual generation numbers. Yeah. Just one more thing here on credit. If you look along the top here, you'll see we've got consolidated numbers for holding companies, but also goes down to the actual utility level. Yeah. Okay, so that's your dashboard. Tijash talked about FIW. You saw all of the great things that you can do with that. One function that I use a lot that really ties into this is the search function. What that lets you do is pick, whatever industry you want. In this particular case, let's say we want to pick refining. So pick refining marketing. There are 507 bonds in there. Let's say you want just purely U.S. You can go into risk, country of risk, and then put in U.S. You can massage this by ratings, by size. Size will give you some idea of liquidity. You can add yield, maturity, and pretty much anything you want. And then once you get down to what you want, simply create a list of all of the bonds. You can sort it out by issuer. Issuer name. Press enter. And then that's basically all the bonds that Valero has. In this particular case, we're doing a count, but if you want the sum, simply click on that. And that gives you everything. And you can sort this, and you want to look and see who's got the most refining bonds. So in this case, PSX does, followed by Valero, Marathon Petroleum, etc. And then you sort of dig into these into these numbers. So I'm just going to finish up with a couple of quick functions that those of you who cover energy may find useful. One is crack spread analysis for refiners, CMSP. When you're doing crack spreads, if you're looking at the price of oil, you want to set that off against, let's say in this particular case, gasoline, and you want to look at a second product, let's say heating oil. So simply put that in, go to the chart, and pick your 3 to 1, and that gives you an idea of where heating oil has been going. And you want to look at the forward curve. This is very interesting. What this shows to me right now is oil prices, the futures prices are coming down, refining margins going up. You take these numbers, you can plug them into your models and sort of get perhaps more realistic numbers than you might by simply taking some assumptions. Yeah. So that's for CMSP. CFVL is the other one that we use for this. This is commodity fair value. So pretty much any commodity you go in this particular case, let's look at natural gas for the Americas. We want to look at natural gas futures. The nice thing about this is it allows you to look at calendar strips, right? So if you want to look at where natural gas prices are at Henry Hub, for instance, one of the advantages that refiners have in the U.S. is the very low price of natural gas. Natural gas is a major component of the cost factor. So if you want to look and see what advantage a U.S. refiner has over, say, a UK refiner, you can look at the difference in the gas price that they have to play with, and then feed that into your model. Yep. Okay, so I think we, pretty much that's the dashboard. That's where you would start. Again, as I pointed out, if you went to BI, you can pick the industry that you want to look at the primers that we have there. Any questions? Obviously, you would give us a call. With every primer, we'll have the analyst name and number on there. Yep. So with that, why don't we have Q&A for pretty much anyone who is speaking today, including myself.
Arnold just stepped out.
Yeah, well, fine.
So, probably you can answer that. You showed us the interactive credit checklist.
Yeah, sure.
And then what you show the earnings across commodities.
Right. So you would just click on that. It'll take you to a spreadsheet.
Can you do
Oh, I'm sorry. He was asking about a checklist, right?
it? User assumptions like that.
See, the checklist would be very specifically for a company, right? Because it would look at what's happening with leverage, what are the cash flows doing, earnings trends, etc. So you wouldn't, it wouldn't be quite the same concept. Yeah. Yeah. Anything else? Anyone else? No, because I'm standing in the way of the drinks and everything else. Please feel free to pick up cards from all of us, say hello. We have a few minutes here for those who arrived late, didn't get a chance to say hello. Please do that, and we're always available. Any questions that you have. Thank you.